Hey everybody, how is it going? Welcome back to my channel. In this video, I want to go over the overall market because I haven't done a video in about a week. I'm feeling pretty sick. I don't know whether I got COVID again or if it's just this ridiculous weather up here in the Northeast. It's like one day we're in the mid 70s, the next day we got a little bit of a blizzard going on, so I don't know if that's messing with me. Either way, I feel like crap. So I just want to go over the market indices just to see where we're at. Then I want to get into the banking stocks. I think the banking stocks are looking pretty good right here, not only for a long-term trade, but also for a short to medium-term trade as well. And then, of course, at the end, as always, I'm going to get into my trading activities. So if you want to see if I made or lost any money, make sure you hang around till the end. But let's start with the QQQ first, and as you can see, the Qs are still playing out this inverted head and shoulders pattern, but it's not a bullish pattern unless it breaks the neckline, and the neckline is right there, right around the 200 period simple moving average. So if we get a break above the neckline on this, it's going to be significant on several levels, not only because of this pattern, but also getting above that 200 period simple moving average. That's going to be pretty bullish for the overall market, and that's what I am hoping for. I'm not holding my breath for it because the market just looks rather weak. But let's recap a little bit of what happened last week. This was Thursday's trading day because Friday the market was closed, but on Wednesday, I was actually pretty optimistic that the market was going to have a chance for a reversal, but Thursday's price action shot that all to hell. And, I was thinking we were going to get some more follow-through to the downside today, and we're not really getting that either. I mean, it was printing a little bit of a doji candle, and doji candles are significant after a move because once you get direction after that doji candle, that's usually where the market tends to follow through. So I think if we can continue to print this doji candle and we get a gap up tomorrow, I think that's going to be a very bullish day, not only because it is going to be moving away from that doji candle, but that would mean that this is a little bit of a false breakdown as well. Now, the fast line on the stochastic has moved above the slow line, so that is a bullish signal as well. So just a gap up tomorrow is all we need. But like I was saying, I am not holding my breath for that because the price action has been very weak. It seems like nobody is really committed to do any hardcore buying until, the Fed makes their decision on how hard they're going to end up raising rates. So I think just smart money is kind of holding out for some more direction from the Fed. But let's take a look at the spider, which of course is the S&P 500, and that looks a lot like the NASDAQ, just basically the same thing, actually a little bit weaker than the NASDAQ. The stochastic hasn't crossed above the slow line yet, even though it is in oversold territory as well. And if we go to the diamonds, which is the Dow Jones Industrial Average, you can see that is holding up a little bit better than the QQQs, mainly because it's a flight to safety kind of trade going on right here. The Dow stocks are usually a little less volatile, so money tends to flow into these type of stocks when there's uncertainty in the overall market. But you can see the stochastic indicator is crossing above the slow line today, so that is a good sign. It stayed above this support area, so of course that is a good sign as well. So I like the way the Dow is holding up. Taking a look at the IWM, I do not like the way the IWM is holding up. Barely staying in this channel right here. I thought after last week's price action, we had a very good chance of, challenging the upper end of this channel and maybe challenging that 200, but couldn't get above this moving average cluster right here, and now it's starting to roll over. So if the IWM, ends up breaking down below this channel, I think the market could be in a big trouble. Let's take a look at the USO. You can see oil bounced off of that 50 period simple moving average last week and is just continuing to move higher, which of course is good for the energy stocks. Taking a look at the XLE. You can see the XLE is breaking out today and is holding that breakout. So even though oil pulled back, the oil stocks just continued to move higher. It's mainly because these oil stocks are going to end up, printing good earnings probably for the next couple of quarters with oil as high as it is. I've been waiting for a significant pullback in some of these oil stocks because I need some more exposure, but they are just not pulling back. I think everybody is trying to get into these things right now. All right, well, before I get into some of those individual names, I'm going to take a look at the XLF, which of course is the financials ETF. And if I back it out a little bit here, you can see we got a little bit of a rounded top thing going on. And one of the first things I learned in technical analysis is you want to buy the smiles and you want to sell the frowns, you know, kind of like training day when they're like, you want to control your smiles and cries. This is a little bit of a cries thing we got going on right here. But if I zoom in a little bit closer, you can see with today's price action, it's finding a little bit of a bottom right at that support area. We had a nice false breakdown in early March. Nice sharp move up, pull back to that support area, and it's holding, at least for the moment anyway. But I think that we're probably going to get a bounce up into this little moving average cluster right around 38.50 on the XLF. And I think that's going to create a decent buying opportunity in some of these banking stocks. Let's take a look at, the first one I want to show you is Goldman Sachs. And I want to buy probably some call options on one of these that are probably, you know, a month, maybe a month and a half out. I haven't decided which one yet. Now, Goldman Sachs I do own in my M1 finance account, but that one I plan on holding on for the long term. But we can see with Goldman Sachs right here, we got a nice positive MACD divergence going on. If you're not familiar with what that is, just look up a YouTube video, but it's basically when you get a lower low on the price, but you get a higher low on the indicator. And that is not the signal right there. What the signal is, or at least I should say my signal is, I look for this first. This is kind of like the get ready signal, and then when it breaks above that 8-period exponential moving average, that is when I like to enter this trade. But Goldman Sachs is looking pretty good at the moment. And just a few numbers on these stocks. You know, Goldman Sachs has a forward PE of 9, so it's not trading all that expensive. Plus, it has a dividend yield of about 2.5% at the moment. So if you want to get into some of these banking stocks, you know, they pulled back quite a bit. And you know, we're in an interest rate rising environment. Normally, banks and energy do well in those type of environments, and we're actually getting a pullback in some of these banking stocks. I think it's because of the forbearance issues we had, you know, with people that were being allowed to not pay their mortgages because of COVID. I think that's some of the problems that these banks are having right now, but I don't think it's really going to affect the big ones as much as the regionals, you know, but that remains to be seen. But at the very least, I think these things could have a decent reactionary move up for the next week or two. But there's Goldman Sachs. Next one I want to show you is Morgan Stanley. You can see Morgan Stanley, a little bit of the same thing going on here, an MACD positive divergent signal moving above that 8-period exponential moving average. Another thing I like to see in these signals is this move up here being very sharp. I like to see a nice V pattern right here. If it's weak, they tend to not work as much. But when they have a sharp move up, come all the way back down, and then jump back above that 8-period exponential moving average, that means, you know, they couldn't knock the price any lower than, or not much lower than this first low right here. And then buyers are starting to take control again. So I like Morgan Stanley right here. And by the way, Morgan Stanley has a forward PE of about 11 right now, so not trading very expensive at all. And they have a dividend yield of about 3.3%. So even if you want some banking exposure in this type of environment, this pullback isn't really a bad pullback to buy at all, in my opinion. But you know, please make all of your own financial decisions. This isn't financial advice. I'm just showing you guys what I'm seeing. But the next one I want to show you is Wells Fargo, WFC. We got the same thing going on with Wells Fargo. A nice little positive MACD divergent signal going on. Hasn't jumped above the 8-period exponential moving average yet. So this one is kind of in that get ready category. But you can see we got that nice V going on in Wells Fargo. So this one is certainly on my list. Next one is Citigroup. Citigroup, nice little positive divergence going on as well, even though this one isn't as sharp. You can see this one didn't have that nice big V, type of pattern that I like to see, but it's shaping up nicely on the right side of this pattern. So, I mean, it's found some support over the last week, and now it's jumping up above that 8-period exponential moving average. So I still like Citigroup here. Citigroup has a forward PE of about 8, so it's pretty low, and a dividend yield of right around 4%. So Citigroup is not a bad play at all right here if you want some exposure to the banking sector. Just look into the company a little bit deeper because there could be some other issues going on. I didn't look real deep into these because I plan on just doing a short-term trade. Next one I want to show you is Bank of America, BAC. We can see we got that positive divergence going on in BAC as well. Hasn't jumped above that 8-period exponential moving average just yet, so this one is also in the get ready category. Bank of America right now, forward PE of 11 and a dividend yield of about 2.25%. So you can see some of these are, they're trading at a pretty decent valuation. Next one is JP Morgan. Full disclosure, I do own this one as well in my M1 Finance account. This one also having a very nice MACD positive divergent signal. It hasn't broken above that 8-period exponential moving average just yet, so this one is also in that wait and see category. JP Morgan, forward PE of 11 and a dividend yield of 3.1%, so not a bad time for JP Morgan either. And last but not least is PNC. I just threw this one in at the end, but we can see we got a nice positive MACD divergence going on with PNC as well. Haven't got above that 8-period exponential moving average just yet. So most of these are in that get ready category. I wanted to show you guys these before most of them flashed a buy signal, but those are the banking stocks that I am watching right now. Okay, so let's get into my trading activity for the day. Today was kind of a boring day. I only made one trade, and there really wasn't anything going on else in my portfolio. I think my portfolio ended down like 0.1%, but I did make a profitable day trade on CASA Systems, ticker symbol CASA. I talked about this one on my pre-market watch list video on my Patreon page. If you guys are interested in joining that Patreon, the link is down there in the description. It's only $9.99 a month. I put out a pre-market watch list video before every single trading day, and I'm in the Discord every day as well, but no pressure to join that. Simply liking the smash button would be much appreciated. But right here in CASA Systems, this is part of my gap and go trading strategy. I try to find stocks that are under $10 that are gapping up, and as they start to pull back, I look for them to find support at right around that 8-period exponential moving average, and if they start to round up, I try to buy the break of that rounded bottom. So let's go to the minute chart, and I'll show you what I mean. Back this thing out. This is a very easy pattern to trade. You don't need me for this. You can trade these on your own, but I like to trade these ones every single morning if I can find one, just to try to get some daily income. But we had this nice little gap up. It looked like it was kind of, going to hold near the highs and then kind of break out, but then it had this move down here, started to round up. So we had a nice little ceiling right here. So I put in my buy order to buy that right around, I think it was like 594 I put my order in, and it got executed at 596 right there, and I sold it at 644. So I sold it, I think right about here. It was only in the trade just for a minute or so. Yeah, right about there is where I sold it. You can see that the stock continued to move higher for a little while, up to about 685 was the high. So I left a little bit on the table right there, and actually I think it ended up going higher than that. Well, shoot. Yeah, it did. Yep, that did end up moving higher. A lot of times when a stock gaps up like this, has a move up here, just kind of fades the rest of the day. But sometimes these things just kind of find some more strength towards the end of the day, and that's what happened with CASA. But I am only interested in trading these in the first half hour or so of the trading day. I'm not trying to buy these things and hope it just continues to run up the rest of the day. Just trying to make that quick profit and then move on to the next thing. But that was the only trade that I made today, and that was in CASA Systems. If you guys have any questions, just leave them for me down there in the comment section, or if you see any good trades setting up, please leave it down there for me in the comment section as well. I really appreciate when you guys take the time to show me stuff in the market, because I can't see everything, so it really helps me out. But I'm going to end the video right there. Thank you so much for watching this all the way to the end, and until next time, take care, everybody.